Welcome to Nasdaq TradeTalks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining us for this segment, we have Joel Simkins, Managing Director and Global Head of Gaming at Houlihan Lokey, to discuss M&A in the gaming and space and raising capital. It's great to have you with us, Joel. Welcome to TradeTalks.
Good afternoon.
All right. And as we enter the last couple months of the year, what are your big takeaways on M&A in the gaming sector right now? And is consolidation still a big theme?
You know, we're starting to see the early green shoots of M&A activity. There's been a few small transactions, albeit fairly notable within our industry. Obviously, the Fanatics PointsBet transaction, there's been some sort of data and other kind of behind the scenes technology for sports betting and online gaming that powers a lot of these platforms. That's really started to take place over the last 6 months or so, although we're really starting to see kind of early pickup in M&A activity. And, you know, just based upon the call volume I've received as a coverage banker, things should be picking up into 2024.
And so what kind of M&A do you predict happening next year?
You know, it's really a question, Jill, at this point of buy it versus build it, right? We look at actually today, DraftKings reported earnings. Things are improving for that business and getting their costs down. But a lot of sports betting platforms and online gaming companies in the US are looking, you know, at the next year or two as being very critical for building a market share and awareness and scale perspective. A number of these companies actually do not control a lot of their own technology. There's a lot more that goes on behind the scenes to power sports books and online casinos, and really controlling all of your technology stack to get your cost of goods down, particularly when folks are still acquiring their customers, is critical. So a lot of the underlying tools and technologies that power sports books and online gaming companies, I think you're going to see some of that stuff targeted.
What do you see when it comes to raising capital? Does the gaming sector mirror the tech sector, or is early stage VC funding making a comeback?
You know, great question. It's obviously a difficult venture capital environment out there. Right now, I'd say the general impetus is to go towards businesses that are, you know, $10 million plus top line, break even to profitable, have some reasonable competitive moats, or really operate within, you know, unique niches within this space. So if you're a business that's, you know, losing a ton of money, it's going to be a number of years for you to get to profitability, very hard to raise capital. Businesses where maybe, again, where there's less competition, you know, so for instance, I was talking to one lottery company CEO this morning. That's an interesting category because there's only 4 or 5 players that are targeting sort of that digital transition of lottery. Anybody that was driving down the highway or kind of following the nightly news and seeing $1 billion plus jackpots this summer, you know, if you're an online lottery technology company and there's less competition, there's a story, and in sort of a untapped universe where you're not competing against FanDuel or DraftKings or BetMGM day to day, that's the type of niche where raising capital is a little bit easier right now.
And back to online sports betting, the fourth quarter of the year gives us the peak of the NFL season, college football playoffs, start of both the NBA and NHL seasons. Is this a make or break time of year for these types of companies?
Mission critical. Interestingly enough, we hosted a sports betting CEO dinner right at the start of the NFL season, you know, back in September. We had about 20 executives at our event. And, you know, obviously everybody was excited about the season heading up to that point. And I'd say the takeaway, call it 7 or 8 weeks into the NFL season, is that, you know, business is quite strong. The headline numbers, at least from the more mature markets as well as newer sports betting markets, has been strong. We're now moving into NBA season. We had the sports equinox a couple of days ago, but the momentum has been good. But more importantly, if folks can have a really strong football season, that's going to make it a lot easier to kind of paint that consolidation story going forward, as well as folks that need to raise capital next year will have a good story to tell that, hey, this is a business that's very real. The TAM is significant and growing, and this is a multi-year story ahead of us.
And finally, outside of sports betting, Joel, what are some of the emerging opportunities that you see in the market?
You know, I also cover land-based gaming and traditional bricks and mortar gaming. You know, I think it's going to be very interesting over the next couple of years. Obviously, with interest rates where they're at, there are a lot of companies that are pretty highly levered, have done a lot of M&A more on the land-based bricks and mortar side. So we're definitely paying attention to potential, you know, restructuring and credit challenges in the space. Again, we were talking about sports betting, online gaming. That's up and to the right. That's a new market. Obviously, the land-based traditional gaming that's relying on sort of the regional drive to consumer. The question is, what happens to that business over the next year or two if we have a bit of an economic weakening? So we're paying attention to credit, restructuring, cost of capital, and going to see what happens for some of the more leveraged companies in the industry over the next couple of years.
All right, Joel, appreciate the insight. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.